Tell me about what the major growth drivers were, and going forward, are we looking at growth at this level being sustainable, as well as getting some thoughts on how you manage the cost side of things as well?
Yes, it was a good half, and so the number you talk about is on a statutory basis. So there's been a change to accounting for our listing business. So on a like-for-like basis, we were up about just north of 10%. That is actually probably the best print we've done since the first half of 2014. And the great thing about it is it's actually across all our businesses, listings, our derivatives businesses, our trading businesses and our post-trade businesses all showed sort of 5 to 10% growth. So that's a very positive thing. On our expense side, we've guided the market last year to a number around about 9%, which is where we are, and that's for two reasons. One, sort of like the underlying expense growth of the business, but also that we're actually investing in putting in what we're calling stronger foundations into our business, and so there's been an expense in our risk management systems, governance, clearing systems, and so what that's done is added about 4%. To what is an underlying sort of 5% run rate, and I think that will actually fade out post June 19 this year. So effectively, I think that we're up at 9%, probably coming back over the coming years.
Yeah, Dominic, the revenue growth side of things does continue to slow, and I'm wondering, given you pointed out derivatives, obviously the biggest part of your business, do you see expansion in that part of the business, or what sort of new growth drivers are you looking to add to the mix?
In the derivatives business, we've seen some good growth there. We put in a new derivatives trading platform in the middle of 2017, and what that actually did was allow a lot of offshore traders to come onto our market. So we've seen good growth there. The good thing about the last 6 months, however, is actually there was some good growth out of the local, end user, fund manager, and banking side of the business. So we're seeing that expand. Obviously there's a lot of focus in Australia on what we're doing in the post-trade world, and so that's sort of another thing that we're spending a lot of our time on around the actual replacement of the CHESS system, which is happening over the next 2 years. And in our trading businesses, up 15%, our trading of equities. And that's been sort of the best, probably the best half we've seen in quite a while. That flows through to post-trade services as well. So, I think what it does show is ASX is actually a business that's actually very broad across debt, across equity, technical services, data, and what you're seeing is all of those businesses are up, and there's a great diversification to that. Also, our listing business, actually, notwithstanding the change in accounting methodology, actually IPO revenue on the old basis, which actually doesn't amortise the flows, was up 71% last year. So there's been some good performances inside there.
To your point in replacing the CHESS system, what progress are you making in adopting blockchain, and what's that going to look like when it comes to you getting some first mover advantage?
Well, I think it's very interesting, because what it is that I think ASX will be sort of first to the market in this space to bring to effectively change the whole back office system of a country in the equity post trade world. So. And in doing that, what we're bringing to the market, and it's a long process that 30 years ago we had paper and chalkboards, and now this is sort of a little bit of an end game, because what you're getting is a system that gives real-time information to people. Those people don't have to check or don't have to message ASX to check that information is true, because they're effectively sitting on the blockchain. And they are permissioned on that. So like on a Bitcoin blockchain, everyone gets to see everything, but of course that can't work in financial services. So it has that functionality. And then the final thing, which I think is really exciting for participants in the industry or stakeholders, is that this is not a system where ASX talks to the industry and that's it, which was like old systems were. People in the industry can talk to other people in the industry over this system. So it allows people to build multi-participant workflows, if you will, and that actually can be very, very powerful to end users on the system to reduce their costs, increase their efficiency.
And Dominic, of course, helping your business as well has been the initial public offerings on your exchange. You're facing a growing competition from global players, especially when it comes to foreign and tech company listings. So what do you have in terms of IPO pipeline right now?
Well, I think we've had a very strong number of years, and if you look at I'd say the growth in our, as you mentioned, our tech IPOs over the last sort of like 4 or 5 years has probably been one of the strongest out there across the globe. There is actually a demand for that type of asset in Australia, because Australia, historically has been more financial services and mining based on its share market. So the technology side has grown. I would say, as I talked about before, the actual listings the actual primary and secondary listings were up 38% last half, which is a very, very strong performance. I think just given the way that the equity market has come back over the last 3 or 4 months, that probably slows things down a bit. We've got an election coming up, we've got Brexit coming up, we've got a whole bunch of things. So I think at the moment, what's working well for our trading businesses, where equity trading and derivatives trading volumes have increased, I think it actually means that it may be a moderating effect on the capital market raising side. But with all of these things, as things settle down, we recently had a very strong tech listing in Australia, which is actually an offshore company. And the reason why they list in Australia is because Australia has a number of tech companies inside that space. And so that company, which has a business offshore, saw Australia as a good place to list because Australian investors understood that part of the tech industry.
Dominic, I'm wondering, given the trend and the flurry of consolidation we've seen across exchanges globally, have you had interest from overseas exchanges in wanting to merge with the ASX?
I think I'm a bit of a believer that, like, if you go back into history, there has been a lot of talk around sort of cross-border and I tend to think actually the trend of the last few years were people actually more focusing on their own businesses, in their own countries. We've seen a number of M&A transactions that sort of like have not completed because effectively joining exchanges are iconic assets, and so they're hard to actually move across borders, and clearing houses effectively are very linked into the payment systems and the underlying reserve banks of those countries, and so they're very hard to merge as well. So I'm not so bullish on global mergers. More, we're very much focusing on an underlying industry here, which we think we can make a tremendous difference in actually reducing costs and increasing efficiencies for the customers that we have in Australia.